Hello traders, you're welcome to this video. In this particular video, we are going to be talking about bullish reversal. Okay, we are going to be discussing 5 key signs of a bullish reversal that you should watch out for to spot when a downtrend is losing steam and an uptrend might be starting. So first of all, you might want to pay attention to bullish reversal candlestick patterns, right? This is the first on our list. Bullish reversal candlestick patterns. And the first one is the hammer. Now let us just look for a hammer on our chart. The hammer is a single candlestick pattern that forms after a downtrend, right? After a downtrend, the hammer forms. It has a small real body and a long lower wick. We can see a hammer right around here. You can see that the wick is longer than the body. It has a smaller body and a longer wick, and it forms after a downtrend. So you can see that we have a hammer formed here. Okay, it signals that buyers stepped in after a sell-off. It indicates strong rejection at lower prices, suggesting a potential reversal. Now we can see that not long after the hammer formed, we can see that the price actually went up. Okay, so when you want to look for a hammer, the things to pay attention to is you have to look for a small body at the top of the candle and a long lower shadow. The lower shadow should be longer than the body. Okay, the lower shadow should be longer than the body with little or no upper shadow. You can see the upper shadow here is very small. There is the wick on top. It's very small. The longer the wick, the stronger the signal. Okay, now one of the ways to avoid pitfalls when using the hammer is confirm with the next candle. Okay, if the next candle closes higher, it adds confirmation that the reversal is genuine. You can see now the next candle closed even much higher. Yes, it closed even much higher. So you might want to check the next candle just to be sure that it's closed higher than the hammer. Okay, that adds to the signal confirmation. Now the next on our list is the morning star. The morning star is a 3 candlestick pattern. It's a 3 candlestick pattern. I hope we find one because there are some patterns that are not like very easy to spot. Like they don't always show up in the market. Some patterns are more common than others. Yeah, some patterns are more common than others. So I just hope we find the morning star. But even if we don't, I'm just going to describe how it looks like. But I hope we really find one. The morning star is a 3 candlestick pattern. It signals bullish reversal also because we're actually talking about bullish reversal. So yes, it does signal bullish reversal. It consists of a large bearish candle. So let's just explain how it looks like before we continue looking for it. A large bearish candle is like the first candle in that 3 candle pattern. Then it's now followed by a small indecision candle, which is often a doji. And then the third candle that now concludes that pattern is a large bullish candle. So we have to look out for, and usually it occurs after a downward movement. Yeah, because it's signaling a bullish reversal. So it always occurs after a downtrend or after a downward move. Okay, since I couldn't find a morning star, just to save time, since I couldn't find a morning star, let's just use the reverse. This is an evening star that formed here, although the signal did not eventually play out. Because just like how morning star is to bullish reversal, evening star is to bearish reversal. Remember that I just said that a morning star is formed by, first of all, a large bearish candle, second, a doji, usually a doji indecision candle, and then third, a large bullish candle. But in the case of an evening star, you have a bullish candle, a doji, an indecision candle, which is usually a doji, and then a bearish candle. So you can see that this is also a 3 candle pattern, but this is an evening star. So the morning star is just the opposite. Okay, So now looking at this evening star, you can just imagine how the morning star will look like. This in the morning star, this would have been a red candle, then the doji would have been at the bottom, then this other candle is going to be a bullish candle. So it signals to the possible end of a bullish or bearish move and the possible start of a bearish move. Just like how the evening star signals the possible end of a bullish move and the possible start of a bearish move. But you know, sometimes signals do not play out sometimes. Just like in this case of this evening star, eventually we had a gap and price pumped up to this place. So it didn't exactly play out in this point, but it doesn't mean that this is not a bearish reversal candlestick pattern. Okay, so the hammer, the morning star, is just the opposite of the evening star. Okay, now the next key sign for bullish reversal we're going to be looking at, but before that, when you are, in case of if you find the morning star and you want to use the morning star to make your buy decision, in order to avoid pitfall, try to make sure that the third candle closes well into the body of the first bearish candle. Okay, just for stronger confirmation. Now, secondly, we are going to be looking at volume confirmation. Okay, what does it mean? Volume is key in confirming the strength of a reversal. So when you see a bullish reversal pattern, it should be accompanied by higher than usual trading volume. Now, for that purpose, we're just going to be adding the volume indicator to our chart, right? So when you notice any bullish reversal candlestick pattern at all, it should have a higher than usual trading volume. If the price is showing signs of reversal but the volume is low, the move might lack conviction. So on the other hand, if a bullish reversal pattern occurs with rising volume, it signals that buyers are stepping in. So if you see, for example, now we can see this is a bullish candlestick. This is like, it's an hammer. It's kind of a hammer, even though the upper wick is a bit long. Okay, let us just use this one. You see, this is a hammer that formed here, right? And you can see the volume. Can you see the length of this? Can you see that there was an increased volume just about the time that this candlestick pattern formed? And eventually, you can see that price went up. Okay, so increasing volume means stronger confirmation. But in order to avoid pitfall, don't just trust low volume breakouts or reversals, as they are more likely to fail or be short-lived. Okay, do not trust low volume breakouts. If you see a breakout but the volume is small or low, please do not trust it. Okay, now the third sign we'll be looking at for bullish reversals is divergence. Divergence in momentum indicators. In previous video, we have talked about divergence already, but I'm just going to give a brief highlight, just a brief highlight, using the stochastic in this case. Okay, so now for just additional signal for bullish reversal, bullish divergence occurs when price is making lower lows, but an indicator like the MACD or the RSI. Okay, sorry, I'm going to be using MACD instead. Or let's just use the stochastics. Okay. Two of the most common indicators used for divergence is the RSI and MACD. Yeah, but we can also use the stochastics. Yeah, since I've already added it to the chart, let's just use the stochastics. So when the price is making higher, low, and the momentum indicator, it has to be a momentum indicator. It has to be a momentum indicator. The momentum indicator is making lower low. Okay, that shows that there is a divergence, right? It shows a divergence when the price is making higher lows, but your momentum indicator is making lower lows. It shows divergence, right? Okay, but remember that we have hidden divergence and we have the regular divergence. We talked about hidden divergence already in the previous video. You might want to check it out. But in the case of a bullish reversal, we should be looking out for a regular divergence. Okay, we should be looking out for a regular divergence. Okay, which occurs when the momentum indicator is making higher lows but the divergence indicator, the price action is the price of the asset is making lower lows, right? So let us look for lower lows and higher lows. Okay, you can see here that the price is making lower lows and the momentum indicator is making higher lows. So I'm just going to delete this. Okay, so now you have to look for the divergence depending on the kind of trader you are, determine the charts that you want to use, right, to find your divergence. Okay, but in this case we are on the 1 hour chart. Okay, now when you find this, you should be anticipating a potential reversal. You see that the price was selling before, but right after this divergence formed, we can see that we had a reversal. We can see that the price went up. The price went up after the divergence. But divergence alone is not enough for confirmation, so you might want to combine it with candlestick patterns or volume analysis just for more solid signal. Now, the fourth sign on our list is support. Very important. Try to have support levels, right? Support levels on your chart, okay? Because we're talking about bullish reversals. That's the reason why we'll just be focusing on the support alone. Yeah, we won't talk about resistance because resistance is for sell, support is for buy, right? So you might want to have support levels on your chart, okay? We can see that we had support level around here, multiple rejections. You can see that we had support level here. We can see that we had support level here, around here. So you might want to have support levels on your chart. It means a bullish reversal is likely to occur when price gets to that support level. You can see multiple rejection here, rejection here, rejection here. At this point, rejection here. So support levels can also help to show that a possible bullish reversal is about to happen. Now you need to identify major support zones using previous swing lows, just like I already did. Remember, you need minimum of 2 previous rejection points. 2 previous rejection points. Price was rejected at 2 places here and here. Use that to draw your line, okay? And that line applies indefinitely to the future, right? Now, when you are using support, doesn't mean that false signals can't be generated, because sometimes we have a fake breakout, okay? So you have to watch out for fake breakouts. In cases where it looks as if price broke out of the support but continued, you can see this was a false breakout here. It's as if price broke out, but eventually it continued going up, okay? So you might also want to use other indicators for additional confirmation, even when using the support levels. Now, trend line represents dynamic support. We have trend lines is used to indicate dynamic support. You can see as price got towards the trend line, got rejected, here got rejected, here got rejected. And usually to draw your trend line, you just need 2 points of rejection, right? 2 points. As we can see, 1, 2, 1, 2. You draw your trend line. Then price got rejected here, it got rejected again here before it finally broke. And then after breaking, it retested it for a bit. You can see just around here. And then before it went up and got rejected again. Because when the support breaks, it turns into a resistance, okay? So trend line is another thing you can use for confirming bullish reversals, okay? You just need to draw it across recent higher lows, okay? That's to confirm your bullish move. This is more like bullish continuations, though. These bullish continuations. Okay, bullish reversal. In the case of bullish reversal, it has to be you have to draw it at lower highs, yes, lower highs, so that after a breakout happens, it now starts a bullish reversal. Yes, exactly. So it has to be on lower highs after 2 points. You draw it after 2 points. Then once a breakout happens, once the price retests the trend line, you can enter your buy, because it's a signal for a bullish reversal. Meanwhile, Don't rush in after the trend line breaks. Okay, just when the trend line breaks, you just jump in and enter your buy. You might want to wait for confirmation, like a retest, just like what happens here, retest of the trend line, okay, as support or strong bullish candle before entering the trade. Okay, and you can see that after the retest, the price went up for a bit. All right. Now, some common pitfalls to avoid when you are trading bullish reversals. One, don't be too early. Jumping into a trade at the first sign of a reversal without confirmation is risky. Always wait for follow through, like a confirmation candle or volume spike before entering. Number two, beware of false breakouts, especially when using support levels. Okay, the price might briefly break below a support level or above a trend line, just like a breakout can happen, and before you know it, the bearish move continues. A breakout can happen before you know it, bearish move continues. So you have to be careful. Okay, wait for multiple signals to align. And then number three, be patient. Patience for full confirmation. Don't just assume that a reversal is valid just because one sign appears. Okay, use a combination of candlesticks, volume, support, and other indicators to confirm the move. So by confirming these tools and understanding the signals, you'll be able to time your entries more precisely and avoid common mistakes leading to better trading results. I hope you found this video insightful. Kindly like and subscribe for more. Cheers and happy trading.